Hey, Pawnbrokers, welcome back to another episode of the Pawn Leaders Podcast. With me today, I have Dave Griffiths, who founded the consultants in 2012 after he realized there was a market for the experience he had developed over the last 32 years in business. Since most precious metal dealers are unaware of the federal guidelines they must follow, it's Dave's job to educate them and get them in compliance before the IRS comes knocking. With 100 plus clients spread along the West Coast from Alaska to Southern California, he's able to help navigate through the local, state, and federal regulations many find burdensome and confusing. Since June of 1996, Dave has owned 2 pawn shops, one in California and one in Oregon, spent 15 years on the board of Oregon Pawnbrokers Association as a secretary and treasurer, and is involved in helping pass legislation at the state level. He's married to his wife, Robin, and they have 1 son and live in Beaverton, Oregon. Dave, welcome to the show.
Thank you very much.
Thanks so much for taking time to be here. Today, we're going to talk about something that I think most pawnbrokers like to avoid talking about, but it's extremely important to talk about, and that's the AML or the anti-money, and it's hard to say, anti-money laundering that we're responsible for.
Right.
So give us some background about you. How did you get into pawnbroking? And how did you get into helping other pawnbrokers with the anti-money laundering?
Well, I got tricked into being a pawnbroker by some friends, and they had a nursing home business, and I had the license, and they had everything but a license. And so at one point in time, they tricked me into going into a pawn shop, and I thought that was a building we were going to make into an Alzheimer's care facility. And until it took me several minutes to figure out why in the world we were in a pawn shop, I was trying to convert it into a residential care home all the way. And eventually found out that I was there to help look at the books. They trusted me enough to look at the books of this guy. And about 45 minutes to an hour, I thought, this was pretty cool. I'd never been in a pawn shop before in my life. And the 3 of us then went and opened a pawn shop after that, because that's what you do. You know, it's cool. Let's go open a pawn shop. And learned a lot of things. And after about 3 years, I'd said I'd had enough of that and went up to Portland. Opened my own, wanted to work for myself, basically. After all the years in restaurant management, I'd made everybody else money. It was time to do it for myself. In working with the state legislation and being on the Oregon Pawnbroker Association board for all those years, it became clear that there was very few that knew what was going on, and they counted on others to kind of do the work. Kind of the old 80-20 rule, you know, we never get all of them. And so in doing that, I decided after I sold my pawn shop when gold was at 1,700. I thought that would be a good idea. Got out and took a couple years to just kind of get my act together, and decided, okay, I'm bored again. Got to go climb another mountain. And thought that was the one thing that was missing. I kept seeing the pawn NPA magazines that come up and have compliance boot camp and all that. And yet I'd go talk to people that had NPA stickers on their doors, and nobody was doing the compliance. They skipped past that to the stuff about how to spot a fake Rolex. That's important, right? But not the compliance stuff. And so, and both will cost you money in different ways, of course, as a pawnbroker. But then I started seeing that there was a need. And as I started talking to my friends, I started getting more people saying, you know what, I am concerned about that. I want to deal with it. And so I just started taking off one state at a time. Tackled Oregon, then went to Washington, had overwhelming response in Washington a year and a half, 2 years ago. And so then I just kind of trickled my way down to California.
Nice. So, you know, I had my own pawn shops, as the listeners know, and as you know, and I got a AML handbook. It sat on my desk. We did what we had to do, did the reporting, but it was, I guess, more scary than wanting to open it up and actually know what was going on. So what do you think, first of all, let's talk about the AML. What is it? Why are we as pawnbrokers required to do it? And why do you think the pawnbrokers are kind of too relaxed about it?
Well, first of all, the feds don't really tell you what you have to do. When you go into business as a pawnbroker, your local folks will tell you they're either going to license you, like in California, different states. In Oregon, you have to get it from the state, but you have to follow the rules set by the state and the local jurisdiction. You still have to follow the federal rules, like payroll tax, things like that. You kind of understand that, but you don't know the rest. And so in 2005, the Title 31 was put in place, and that was for the Patriot Act. And the Patriot Act had to do with the idea that people like our friend El Chapo Guzman did a lot of money laundering. And when they asked him, 85% of where he got his funds laundered was through pawn shops, secondhand stores, pawnbrokers, not pawnbrokers, but jewelry stores, anybody that would take precious metals. So they could do that because he knew they couldn't trace it. And so they said, you know what, we need to kind of need to work on that. If we've got narco terror going on, we've got the other kind of terrorists going on, we need to make sure we're not giving them that funding. So a lot of the money laundering stuff's been around a lot longer than 2005, but precious metal dealers got hooked into it in 2005. And the idea is if you have a certain level threshold of business, if you do $50,000 in and out in precious metals that have a 50% content or higher in gold, you have to, in a year, you have to have a anti-money laundering program in place. It's not a question of whether you choose to or not. It's a federal law. And if you get caught without it, then the fine starts at $25,000.
Wow.
Not having an account, a program in place. So the program itself for those people includes, you need to have a program in place, number one, which you had done, right? You had the book. Mm-hmm. And you have to identify someone who's in charge of that program. So that's number two. Those are the easy ones. I mean, the book costs money one time and you get somebody in charge. The action items that people don't do is you have to train your staff within 30 days of hiring. You have to have an annual refresher training every single year. You have to document all that. And then you also have to have someone come by and audit your systems to make sure they're catching things or capable of catching things. If you don't have the last two, you kind of like have to have all four legs on the table or you got a real wobbly table. And so it does happen where they'll come in and they'll say, let me see your compliance program. And people say, oh, no problem. Got it right here. And when they realize that it first took you 20 minutes to find the thing, dust it all off, they know that you didn't do anything with it. You're already in trouble. And the goal is to satisfy their needs with that book enough or that program that they don't go looking any further.
Yeah. And so what I remember from the AML handbook, it's, if you do loans over a certain amount, if filling out the CTRs, $10,000 in cash, what are three mistakes that pawnbrokers are making today above and beyond not having a program in place? What are three mistakes that pawnbrokers are making today that is against federal regulation that can get them into some trouble?
Okay, so probably the one that's got the most people confused is the $10,000. And as pawnbrokers, we don't have to fill out a CTR. MSBs have to fill out a CTR. Pawnbrokers fill out an 8300 form.
Yes.
Because pawnbrokers is a business, not a bank, a financial institution. So the rules are slightly different. And unfortunately, you've got programs that are not reporting this correctly and not helping the pawnbrokers. Pawnbrokers are counting on those programs to identify their reporting requirements, and they're not doing it correctly. So working on that offline. Counting on your program to do it, you need to have some kind of a backup program to make sure, and maybe even manually right now. Most of our shops are doing it manually because it's easier than having to deal with a program that's not correct. They're either taking deposits to the bank. This is triggering more IRS issues than anything right now that I've seen, is when they take deposits to the bank and they're taking those deposits in less than $10,000 increments, but they might do 2 in 2 days. And that puts them over the 10,000. And so if in old days, the banker would know you and go, oh, well, that's just Yigal in his shop. That's how they do it. And it's not a big deal. We know it. Now there's a program in place and there's some person that has no idea who you are sitting in office, running reports. Your name comes up on a report and they submit a suspicious activity report because you're trying to get away with getting past the $10,000 filing rule. So that's probably the first thing. And then you will get a visit from the IRS. They'll come to you and they'll say, we understand that you were putting these deposits in and you were trying to skirt the 8300 rule. And you said, wait, whoa, hold on. What? I just took deposits to the bank. So you need to know and this is tough at Christmas time. It's also tough when we always get the rest of our money, which is what? Tax time. People are coming in, picking up all their loans. You get these big, if your insurance company has said to you, your liability company has said, no more than $15,000 in your store, put the rest in the bank. So your manager's doing exactly what he was told to do. Take the money to the bank. And it's not his fault. One was 7,000. Next day did 9,000. Nope, there's 16,000. You're over the top. Now you're going to have a visit from the IRS. So you need to be having that conversation with your bank ahead of time, explaining to them what's going on. They don't see a lot of cash anymore. So we're an anomaly. One of the other problems is not understanding what related transactions are and how the $10,000 relates to that particular type of transaction. So heavy hitters is what you're looking for. You're not looking for the person that comes in every Friday and gets a loan to go gambling or whatever it is. We'll call it gambling. I know they call it something else, diapers and beer and whatever, but in some cases. So you're looking for the heavy hitters. You're looking for the ones that actually could be doing money laundering and all that are capable of doing 10,000. So just understanding the $10,000 rule. And on top of that, making sure that you understand it's not 10,000. I can bring 10,000 into your store today and you don't have to fill out a form. It's 10,000 and a penny. It's the penny that will get you every time. So they need to understand that difference. The last thing is just,
sorry, Dave, and it's over time as well, right? Like if someone brings in 6,000 today, 4,000, $20 the next day, then there's an issue there as well.
Sure. There's a 24-hour period that makes it related. So you have to look at, is it the same household? Is it the same account? So somebody coming in and getting picking up some things and giving you 4,000 in cash in the morning, and then they get a big check in the mail, they go cash it and bring another $8,000 and pick up the rest of their items. That's, going to put you over 10,000. It's one day, one account. You have to report that information, that transaction. So the hardest one is the 365 rolling days. So if you get somebody who comes in and borrows, let's say you're going to double your money in most any state in the union. So over a year at minimum. So let's just say, somebody comes in and borrows $6,000 in a day, and they've got maybe 4 different items they bring in. You have to track those items through all the way until they're picked up.
Wow.
And if at any point in time in that 365 rolling day period that starts the day the first payment is made, not the day they were loaned out, because that money went out. You need money coming in. So as soon as the money starts coming in, you start the ticker and you go 365 days. And if at any point in time in that you hit $10,000 in a penny or more, you have to report that to the IRS.
So let's talk about that real quick, just so that we got some clarity. So if somebody comes in and pawns something, like a bracelet, and they get $5,000 for it, they come back 2 weeks later and they take it out, and then they put it back in. They take it out, they put it back in. At some point, you're over the $10,000.
That doesn't matter because it has to be an unbroken chain. So only on renewals. So if that chain or bracelet stayed and they renewed it twice and then they picked it up and it hit over 10,000 with the interest and the principal they bring in.
Okay.
And it goes, if they pick it up, it stops.
Okay.
Your transaction's over. You didn't hit 10,000 and you got to start all over again.
Gotcha. So it's somebody who's got a big item in there where the interest is a high dollar amount, let's say, and over 365 days, it's added up to $10,000 of money coming into the pawn shop,
right? Not
with redemption. You have to essentially track it from day one to the end of the year to make sure that you didn't hit 10,001 penny.
Right.
And a lot of the software systems out there are not doing this currently, correct?
They're not doing it correctly. Yeah.
Correctly. Okay. Gotcha. All right.
Yeah.
Wow.
So they're using it as a CTR, which is cash in and out. So for example, if you loan someone $5,000, let's use your bracelet as an example. It's a $5,000 loan. They do the bracelet. They come back. They pay $1,000 in interest. Pick it up at $6,000. Most of the software programs out there are calling out $11,000, and it trips a report. And now you think, oh my gosh, I've got to do something. They did over 10,000. No, they didn't. They did 6,000. 6,000 is all that came in. That's all we care about. We don't care about the money that went out. The money that went out is a marker for you to say, hey, wait a minute. I need to pay attention to that transaction. That's all.
Gotcha. So the most important thing is, and I remember you talking about, when you go make deposits at the bank, I remember us getting letters from the IRS saying, why are you depositing so much money? What's going on? What's the nature of the business? And we had to explain it, talk with a bank manager. We had to jump through some hoops. I remember that for sure.
Usually the best thing you can do is be proactive. Go talk to the bank manager today and tell them, look, these are the things that happen. This is the time of year here in the next couple of months where you're going to start seeing bigger transactions, and you can look back at our history and see that historically. So please don't lump us into this, just nameless, faceless bunch that's trying to do something wrong. This is our business. We've been here 20 years, whatever it is. And let's not just be writing letters to the IRS or it's actually not a letter they send a suspicious activity report. So automatically you write to the top.
So, and a lot of banks right now are kicking pawn shops out, right? Bank of America
Correct.
just did a sweep. When I was there, Chase did a sweep. Mm-hmm. What do you recommend for a pawnbroker to do when finding a bank to work with all these AML issues with?
So what's happening right now, the feds came out in September and said Operation Choke Point, which is what that was called, was no longer happening, null and void. And pawnbrokers in California, for example, know that is absolutely incorrect. They might have said that federally, but in California, it's alive and well and thriving right now. So all the big banks are kicking people out. At some point or another, the bank will get audited, and they're going to say you are a kind of a high-risk customer as a pawnbroker. So what you need to do, the new banks now, the smaller banks will take you, but they want to make sure that you have an AML program in place. Most are requiring that. If you don't have it, then you're not going to get get an account. Good for Dave, I guess, right? So what you need to do as a pawnbroker is you need to be looking at, and this becomes real problemsome if you have a line of credit, because they'll term your line of credit out. Now you've got a problem. Now you got to go apply for a loan, and we know banks don't like to give pawnbrokers loans. So you could have a real problem real fast. The idea is to go find a regional or small business bank that's local to you and wants your business and will come in and see your business and get to know you as an individual, as a customer. And those are the ones that will pick you up. Those are the ones that want your business gladly, and they don't care about B of A, Chase, Key, Wells, any of the other City. All those guys are dumping pawnbrokers left and right.
Yeah. So building a relationship with a small local bank as opposed to one of these big banks. Are credit unions in the same boat as that?
Credit unions will help you out. Yeah, especially anybody local. You just got to look about local community, and because they're just like us, we would rather support small business and family type businesses than anybody else. And that's what they do. And that's what they are. So they can appreciate it a lot more.
Yeah.
It has to do with FDIC insurance and all that. So if you're dealing with high risk people like pawn shops, which is a misconception, obviously, there are those that give us a black eye, but it's not the norm. It's the exception. It's just the one that's out there for everyone to believe. And so the banks are believing that, and they just add that to the list. With gun dealers, if you're a pawnbroker in California that deals in guns, you're screwed. You're not going to get, the banks don't want you. Well, I can tell you, I've helped banks in the last 30 days. I've helped pawnbrokers in the last 30 days get bank accounts, and they have lots of guns, and it's just because of how we write the program. And sometimes I have to call the bank and help, but we get through it.
So the most important thing is to know that the most important thing that a bank wants to know, even on a local base, is that you have an AML program. You're following it to the T, because they don't want to get hit by the federal government with some type of a warning saying you're not taking care of what you need to take care of. So we as pawnbrokers have to do the work for them so that they are calm and they can keep the relationship open. Correct?
Sure. And it's kind of a proactive stance for you as a pawnbroker, because you're going to be the one that has to go chasing a new bank account if you're not careful. So you need to work to massage that. No different than you work to massage your customer base. You need to massage that banking relationship on a regular basis.
So I think what you said about being proactive is important. I remember about a year before I left, Chase shut us down, and we had 3 accounts with them. We had, from mortgages to loans, we had it all, credit cards. And they gave us 30 days to get out. Give us just kicked a boot to the butt. And we'd been with them for 15 years plus. And we were scrambling to find what we can do, start a new relationship. So I'm going to guess that a recommendation that you're going to make, Dave, is to go out there, find that local bank. Or if you're at one, just kind of have a conversation.
Absolutely. Yeah.
Especially now that January, February, March is coming up. The podcast is going to release during this time when there's a big cash flow coming in. Be proactive about talking about it.
That's right. Yeah, get out there and make the effort. It's going to be one of the most important things to do, because we all as business owners want to make sure that we're in control. And you're very out of control when you get the letter from the bank and it says, we really appreciate you, blah, 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 blah. Bottom line, you have 21 days or whatever it is to get out, or we're freezing, And if you have a loan, we're going to term it out. Sorry, have a nice day. It's not changing. And you can call and talk to them. Nothing's going to happen. So you need to be proactive about that and get out in front of it.
All right. So pawnbrokers, listen up to Dave. Go out, be proactive. Talk with your bank. Make sure that you're not going to get kicked out. Make sure that they're okay with what you do, especially depositing big amounts of money. And even sometimes I remember getting slack for needing money from the bank. You walk in saying, hey, I need, $25,000 to fill the till. And it was jumping through hoops and come back in 4 days. And
why do you they don't have it. They don't have cash. It's become such a problem. Most banks don't have any more than $40,000 on hand at a time.
Wow.
depending on communities, because they just don't need it. So yeah, you have to order the cash ahead of time. And that's where you need to have that relationship with the bank. Now, you can have that relationship with B of A all you want. But at the end of the day, if some regulator from up on high, some area guy says, you know what, this is what we're doing, and it doesn't matter, then the customers are gone.
Yeah.
And you're just going to be on the chopping block. So, but if you have that relationship with somebody local, be it a credit union or a regional business bank, you're going to have a much better go of it. And they're usually with open arms will take you.
Yeah.
It's not the masses. The bigger banks, the bigger name banks that we're all familiar with, they're going to go after the masses. They don't care who you are. They just want your account. And I did have one that happened. This was I think it was down in the Riverside County area. He had gotten choke pointed. And so then he went and he thought he had 3 stores. He thought, you know what I'm going to do? I'm going to go get 3 different accounts, 3 different banks for my 3 different stores. And so he went with 3 big banks, and guess what happened? They all took him. 2 weeks later, he starts getting gee, we're really sorry, but we can't be your bank now.
Oh.
He hasn't even got his checks yet. He's ordered, right? And now all 3 banks have canceled him. And so now he's had to go back to the idea of you need to get to the small bank.
Wow.
And they'll take care of you. The local bank will take care of you.
Yeah, listen, pawnbrokers, we're a small business.
Yeah.
Like you said, support a small bank, a community bank that needs the accounts that you want the relationship with. And I think as pawnbrokers, we need to create relationships in our communities with our banks, especially with our elected officials. You up in Oregon served on the board, and that's important to connect with the people in your community.
And you need to do that continually. I mean, that's a whole nother podcast. You need to do that continually. You cannot just stop. Well, we did it once. Everybody understands us and go away, because those election things, they keep happening. And so people keep getting booted out, and you get, hopefully some do, some don't, but you keep having a different mix. Every single time you get a new mix of people in there, you got to go make friends again with these people, because they have overwhelmingly got misconceptions about pawnbrokers.
Yeah. One of the ways that we were able to change that is I became the president of my business association, 750 members. And so now we are regarded as a respectable business within the community.
Mm-hmm. And that doesn't happen overnight, does it?
No. I had to work for it. I was on the board. I went to meetings. It took me 3 or 4 years to do. But if you want to lead, which that's what the pawn leaders are all about, you have to get into a leadership position. Mm-hmm. You have to do what you need to do to protect your business, your family, your money. And it starts with leadership, 100%.
Yeah. Whining is not usually a good way to do it.
Yeah.
I think we're seen as whiners sometimes.
Yeah. Well, I think it's because a lot of people now, especially a lot of pawnbrokers listening, they say, oh, the business has changed. And I bring this up on almost every podcast. I believe that in order to be a great pawnbroker today, you have to be a better leader, a better marketer, and a better business strategist. Because before, the doors would open and money would come walking in. What do you think about that?
Oh, I agree 100%. Yeah, you just had to you didn't have to advertise, just open your door. If they knew you had money and they needed it, they found you. It's like you're the only restaurant in town. They knew you. And then as soon as people started, and it happened with the televising, the Pawn Stars and people like that, all of a sudden, everybody could be a pawn shop. You had a furniture store down the street. We Buy Gold, that whole We Buy Gold thing that changed the entire environment of pawnbroking at that point. We got 60% less gold across the country now to deal with than we had before, because everybody got rid of their gold, was enticed to do that. And now where are the We Buy Gold guys? They're gone.
Yeah.
They're gone. They decimated the industry. And now you got pawnbrokers that came in that could buy and scrap gold in a moment and just thought, man, this is so cool, until it's not. And now you get a camera that comes in and a guitar and a TV, and they have no clue what to do with these things. And now they all want out of the business because, well, it's not fun anymore. Yeah. Well, you should have been around 20 years ago when we were dealing with VCRs,
Yeah, I agree. Let's talk about, I don't want to scare people, but I want to make sure that people know who are listening that the IRS can come knocking.
Sure. Oh, sure.
Give us a story about a pawnbroker who didn't have an AML program in place. If you can share with us kind of what happened, how much work it took you to help them out with it, how to get out of it. Give us a story.
So the one that comes to mind right away is there was a guy in kind of central Washington, a central central western Washington, down by the Capitol. And that one day the IRS walked in, and this guy is not necessarily a huge pawnbroker. He's not glitzy glamoury. He's just an average guy, you know, has a medium average store. And they walked in, IRS walked in, plucked their badges out, told the employees, we're here to do a federal compliance investigation, or inspection. Sorry, got to use the right term. And so the employee said, a what? And he goes, a federal compliance inspection. Do you have a federal compliance program? And he goes, well, hold on a sec. Let me get my boss. So go get the owner. The owner comes out and goes, what do you need? And he goes, need a federal compliance inspection. Do you have a federal compliance program? Money laundering program. Yeah, I've got that somewhere. So he goes and he looks for it. It took him 20 minutes to find it. He'd bought it 8 years prior. And he brings this program out. And of course, you could see the guy in the back dusting it off in his shirt, you know, blowing it off and on, right? And after 20 minutes, the IRS knows that this program is at the very least not used very often. If the guy can't find it, you know, either that or he's in the back and he's having a panic attack and just can't come face him. They go out, he brings the program out. They go, oh, good, you got one. He goes, yeah, we got one. Okay, good. That's number one. That's table leg number one. Who's in charge of it? Well, I am. Okay, they open it up. Sure enough, there's a certification. He's the guy in charge. Well, that's two. How about your training? Well, we didn't really do any training. Oh, how about your audits? How about your annual inspections of your audits of your program to make? Oh, no, we really didn't do those either. Well, okay, then what we're going to have to do is we're going to have to identify whether you really need the program or not. So for 4.5 days, they worked in his computers to identify whether he needed a program or not. Now, we all know that it wouldn't take us probably an hour to figure that out. But for 4.5 days, they crawled through his computers, of course, identified that he needed a program. And then the set by how much they were going to fine him. He did have a program, and they were actually kind to him. I'm not going to say how much they fined him, but it was 5 figures. And so the idea was that he was now once again going to be compliant. But what he did, this was before he met me. All right, this was just before he met me. And so he ended up having to contact the gentleman that originally got him the thing, flying back up there and do the whole thing all over again, which cost him a fortune. And then he opened another store. So we're going to work in that one with him and try and help ease the pain. I'm giving him some free stuff just to, he doesn't need to keep paying for this, you know. But the idea is that, yes, it does happen. And people say, oh, I never heard it. Well, I can tell you it happened to him. I want to say it was like November a couple of years ago. And he was at the pawnbroker meeting 5 months later for Washington State. And he was still upset about this. And he was telling everybody, you do not want to go through this. And what he didn't know was I was in the room, and that was my first time to present to the Washington Pawnbroker Association. And so the president knew it, and he says, well, Dave, I think it's your turn to talk now about it. You know, and this guy was like, yeah, he's right. Everything he says, that's right. That's what they did to me. I mean, I couldn't have asked for a better setup, right? It was like a dog and pony show, right? And I finally said, I don't know you, right? We've never met. He goes, nope, we've never met. So, but yeah, it's painful when it happens. And he would tell anybody right now, don't be caught without the program. Just because you've never needed it before doesn't mean you don't need it now. You've always needed it. You just don't think so. And the other thing you don't think about is, so the consumer finance folks, the fine people in Washington that decide that payday loans are bad and all that. So they've put such strict regulations on them, and they've done away with most of them. Who rises to the top of the bad guy pile now? It's us.
Yeah.
And so don't think for a second that, see, we've been shielded from a lot because we could always say, well, title lenders this and check cashers that and all these, blah, 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 blah. Okay, well, now guess who's at the top of the heap? It's the pawnbroker. We're the nasty person that takes advantage of people, supposedly. And we're the predatory lender now, supposedly. And we know that's not true, but you can't convince some folks that that's the case. And so they can legislate against us very easily. So don't think for a second that, you know, the layers off the onion, they've been peeled back a little bit. So we're now more of a target than we've ever been. You can't be complacent now.
And that story gave me heartburn just listening to it. I can't imagine what that pawn shop owner went through.
He lost years off his life.
Yeah, I'm sure.
Yeah.
Pawnbrokers, don't sit by the wayside. Stop lying to yourselves. If you don't have an anti-money laundering program, talk with Dave. We'll give you his contact information at the end of the podcast. But before we give them the information, on our pre-interview, Dave, we spoke about Highland Pawnbrokers. I had no idea you were a partner in that. There was a shooting a couple of days ago where I believe it was your partner's son was shot, correct?
Yeah. That's correct.
So I don't want to kind of relive the story, but firsthand information is very, very important. Security is very, very important. Just like a glimmer of information can you give to the pawnbrokers who have heard about the story, about what's going on or what the family needs?
Well, right now, in particular, because it was in California, the outpouring of support from the California Pawnbroker Association is incredible. And personally, because I've been the one kind of fielding most of it, it's been absolutely incredible. So I think that to me, the association membership, everybody knows it could have been them, and just hopes and prays it never is. And in most cases, it never is. In this case, there was a fatality. Right now, a lot of what they need is to just get back to their normal, whatever their new normal will be. We do have the GoFundMe account set up, and we'll give that out at the end, as you said. They just need to. I think for them, it would be important to know that somebody learned from their situation. And I won't say mistakes, because it was not mistakes. This was something that nobody, had this been any shop, it could have been as bad or worse than what we experienced in our shop. When somebody comes in and they just throw a Molotov cocktail in and start shooting, no commands were given, no get down, no this is a robbery, just started shooting. There was in some ways, he was the only one at the front of the store. The other two were doing things and happened to be just right behind where he was at. And in all the shots that were fired, they did chase the guys out of the store. They were only in the store 17 seconds. And in 17 seconds, the only thing they took was a life, which we would gladly trade to have back. But they got nothing, absolutely nothing. And they changed everybody's life in that store forever. So I think the big thing for us is to make sure that people are redoubling their efforts to talk with their staff. What do you do? Train your people. Make sure they feel comfortable. Do the right things there. Have the conversations. This store right now just needs time. They have a service on Monday for Jason, and then a week after that, I'll be back down there. And we'll start talking about. We'll go into the different stores and talk about different security ideas and thoughts. And rather than make a knee-jerk reaction that we might regret, we're going to go back and do some research and see what we can do to shore things up. It's just a shame because it's just senseless.
Yeah. Well, thank you for sharing. And in an upcoming episode, I have an interview with Tony Gallo to talk about security and what people can do. And I think I can leave the listeners with, be responsible for your business when it comes to the AML, training your employees when it comes to security and yourselves, and be safe all around. Super important.
Yeah.
Dave,
yeah.
How can people get a hold of you if they need, and because they need an AML program, as we heard the horror stories when it comes to not having one, how can they get a hold of you?
The best way is by email or phone. The email is dave@theconsultants.us. And my phone's 503-970-7739. That's on my site all the time. And the only time I don't answer it is when I'm standing in front of a pawnbroker talking to them. They
got it. And so we'll put that in the show notes.
Okay.
And we'll put up those recommendations. Guys, thank you so much for listening to the Pawn Leaders podcast. If you want more information about the Pawn Leaders, go to www.pawnleaders.com. Subscribe to the podcast. Share it. If you can give me a review, I would truly, truly appreciate it. Dave, thank you so much for being here today and sharing your wisdom. And thanks for your time.
Absolutely. Thanks for having me.